This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Global oil prices climbed in early trade on Thursday, supported by signals from the U.S. Federal Reserve on a possible start to rate cuts and as China unveiled new support measures for its embattled property market. Brent crude futures rose 46 cents, or 0.6%, to $81.03 a barrel, and U.S. West Texas Intermediate crude futures gained 47 cents, or 0.6%, to $76.33 at 0140 GMT, after falling by more than $2 a barrel in the previous session. Federal Reserve Chair Jerome Powell said on Wednesday that interest rates had peaked and would move lower in coming months, with inflation continuing to fall and an expectation of sustained job and economic growth.
U.S. crude stocks rose last week as a jump in production after an extreme freeze outweighed a slower recovery in refinery runs and exports, the Energy Information Administration said on Wednesday. Crude inventories rose by 1.2 million barrels to 421.9 million barrels in the week ended January 26, the AS said, compared with analysts' expectations in a Reuters poll for a 217,000 barrel draw. Oil production climbed 700,000 barrels of oil per day to 13 million barrels, recovering after the cold temperatures shut in operations around the country. North Dakota production had fallen by as much as half, but this week was returning to near normal levels.
Moving on to the top news in the energy sector.
OPEC oil output in January registered the biggest monthly drop since July, a Reuters survey found, as several members implemented new voluntary production cuts agreed with the wider OPEC Plus alliance and unrest curbed Libyan output. The OPEC pumped 26.33 million barrels per day, BPD, this month, down 410,000 barrels of oil per day from December, the survey found. December's total strips out Angola, which has left OPEC. The latest decline marks a further drop in market share for OPEC, which began curbing output in late 2022, in order to support the market and counter increased output from non-OPEC countries such as Brazil and the United States.
Saudi Arabia's surprise reversal of its oil expansion ambitions was at least 6 months in the making, said an industry source, after Riyadh concluded its vast spare capacity was enough to supply markets during crises and further investments in new fields would make no economic sense. State oil giant Aramco was ordered by the Saudi Energy Ministry on Tuesday to halt plans to boost its maximum sustainable capacity to 13 million barrels per day, BPD, returning to the previous 12 million barrels of oil per day target. The kingdom is the world's largest oil exporter and is pumping around 9 million barrels of oil per day, well below capacity after several output cuts coordinated with the de facto Saudi-led OPEC and its allies. Next, we have the top news in metal markets. Copper output in Chile, the world's largest producer of the red metal, remained unchanged year-on-year in December to 495,537 metric tons, the country's INE statistics agency said on Wednesday. Manufacturing production in the Andean nation decreased 1.8% in the period, INE added.
Prices of base metals fell on Thursday, pressured by a stronger US dollar after the Federal Reserve pushed back against market expectation for an interest rate cut in March. 3-month copper on the London Metal Exchange fell 0.3% to $8,587 per metric ton by 0248 GMT, while the most traded March copper contract on the Shanghai Futures Exchange was nearly flat at 69,230 yuan, $9,646.49 a ton. The dollar climbed after Fed Chair Jerome Powell pushed back on the idea of a first U.S. interest rate cut as soon as March.
We will now look at the top news in the agricultural sector.
Russia will increase the area for the 2024 harvest by 300,000 hectares to 84.5 million hectares, Agriculture Minister Dmitry Patrushev said. Winter crops have been sown on 20 million hectares. As of December, 96% of crops were in a good or satisfactory condition. That is about the same as a year earlier. Almost 56 million hectares have been allocated for spring crops, Patrushev added. while the rest of the sown area is under perennial fodder crops. According to Petrushev, field work in southern regions and the North Caucasus is expected to begin in mid-February, weather permitting. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.